This week was a massive one for crypto regulation in the United States, with the US Congress passing multiple crypto-friendly bills and the SEC approving all Ethereum ETFs. In today's video, I'll go through the implications of that, as well as the rest of your DeFi and airdrop news for the week. Welcome back to Dynamo DeFi. My name is Patrick. As a reminder, nothing in this video is financial advice, and it is purely for educational purposes. Now let's get into it. Before we get into the headline story this week, a reminder that these news segments are sponsored by RabbitX. RabbitX is the perpetuals DEX built for traders. You can trade coins like Bitcoin, Ethereum, Dogecoin, Solana on leverage, but you can do it from your wallet rather than having to use a centralized exchange. They also have a killer mobile app. Check it out in the link in the description. All right, so let's get into the top story of the week, and that is massively good regulatory news for crypto in the United States. US House approved the crypto FIT21 bill, FIT21, on May 22nd, and that stands for Financial Innovation and Technology for the 21st Century Act. And basically, this sets up a regulatory framework for crypto. Many of you probably already know, we've talked about it many times on this channel, there's a lot of uncertainty surrounding the future of the crypto industry in the United States. And that's why you have so many companies, even those with American founders, often incorporate abroad, or they have key parts of their operations abroad, or they're not available to US customers. Well, I think this is a big step towards starting to change that. The bill passed with bipartisan support. So 279 to 136 vote. This is, by the way, the largest crypto bill ever passed in US Congress, and nearly every Republican as well as 71 Democrats voted for it. So again, there's broad support across the political spectrum for this reform in the way the US handles crypto. And I'm not going to go through every exact detail of the bill. There's many people who have, and many who are more qualified than me. However, to highlight some things, first off, they establish clear lines between the SEC and CFTC and make a clear process to determine which digital assets are subject to the SEC's jurisdiction and the CFTC's jurisdiction. So in short, what that means is the bill establishes guidelines for when a coin or token would be classified as a security versus being classified as a commodity. And I think this is a massively positive step forward towards various blockchains being able to operate or be listed on exchanges in the United States without needing to worry that one day the SEC is going to show up and declare that actually that's a security, you are selling an unregistered security. It establishes other guidelines for exchanges, brokers, and dealers. Again, I'm not going to go into all of them, but the fact of the matter is that this is a crypto-friendly regulatory framework that is being established. And I know one concern was that the White House would veto it. And mind you, this bill is not a law yet. However, the White House did put out this statement that the administration is eager to work with Congress to ensure a comprehensive and balanced regulatory framework for digital assets. I think this is great news. I think a lot of this, let's be honest, it's an election year. I think many people in the government, particularly those who have opposed crypto in the past, like the current administration, they started to see that the crypto community actually has money to throw around. They also saw that there may be more people who care about crypto than they anticipated, or at a minimum, there's more single issue voters who care about crypto in a positive way versus people who hate crypto that are single issue voters. Right? There's a lot of people who dislike crypto that just don't really think about it or care, but a lot of people who like crypto, if you tell them you're going to ban their investments, obviously they're not going to be too happy about that. So I think there's definitely some political reasons for this, but the fact of the matter is, if that's what it takes to get positive crypto regulation, I'm not going to complain, right? I run a crypto business in the United States in the form of an information and media and education business, and seeing things like this makes me much more confident that I'll be able to continue doing that for the foreseeable future. But that wasn't the only good regulatory news this week. We also had the House passing a bill to ban the Fed from creating a central bank digital currency. And the first concern with this is CBDC could turn into a violation of privacy or freedom of speech if, for example, the government had the ability to easily freeze your assets or limit what you could spend them on by programming the CBDC. The other side of this is that this increases the chance that stablecoins, if they reach trillions of dollars of usage, as some are predicting, in fact, Paul Ryan recently predicted that stablecoins would eventually reach a multi-trillion-dollar market cap, it increases the chance that they exist on a public blockchain versus being on some sort of Fed chain. So I think that that's actually really positive news for the future of DeFi and stablecoin ecosystem. And then finally, you had the SEC approving all spot Ethereum ETFs. Many people thought this wouldn't happen. In fact, the betting odds were against it less than a week ago, until the Bloomberg ETF analysts came out and said that actually they were upgrading their percentage chance that it was approved, and then Congress pressured the SEC to approve them, or rather encouraged the SEC to approve them. And so what was the effect of this? Well, the first effect, as soon as analysts started to predict that the ETFs would be approved, was that the Ethereum price jumped massively, jumping from under $3,100 to around $3,700 in a single day. Perhaps the largest price increase ever in Ethereum's history, if not certainly one of the largest, adding tens of billions of dollars of market cap to Ethereum, and it's actually stayed there even following the approval, right? Some people thought that there was going to be a sell the news event following the approval. All in all, that is a 21.1% increase over the past 7 days. And first effect of this, I would say, in terms of second order effects, is this is of course extremely good for the Ethereum ecosystem. That's Ethereum layer 2s. That's anything to do with Ethereum staking or restaking. Even though these ETFs won't be staked, it's still good for the Ethereum price, which is good for the revenue from Ethereum liquid staking solutions. And I think that we're already starting to see that. So if we look, for example, at the DeFi chains that had the most growth over the past week, remember, ETH is up 21%. So we really want to see a chain that has TVL increase by more than 21% to show that it's actually outpacing ETH's price. And so we see Arbitrum is up 16%, which is great, right? They're still a beneficiary, but to see which chains are really benefiting from this, I'd like to see ones that are up more. The ones that jump out are Blast, which is up 24%, Mode, which is up 47%, and Linea, which is up over 71%. And all three of those are Ethereum layer 2s. I would say all three of those are newer, fast-growing Ethereum layer 2s that have some sort of incentive. So Blast still has their ongoing points program where they will be doing an airdrop at some point, and so that's resulted in many people trying to farm the Blast airdrop. You can see their TVL was stagnant for a while, but it started to grow again recently. Mode is another one. Mode recently did the first season of their airdrop, but they likely have other airdrops coming in the future. And although there's been volatility, their TVL has continued to grow. Again, like Blast, you could think of Mode as something that's innovating in terms of economics and incentives with a chain-wide points program, as well as points programs for many of the protocols on Mode, rather than innovating in technology. And then Linea. I think Linea is a really interesting one because Linea is backed by Consensus, the same company that built MetaMask, same company that built Infura. And so that is one of the most reputable software companies in the Ethereum ecosystem, if not in all of crypto. And this is the chain that they're working on. And although Linea perhaps got off to a slower start than some people were expecting, although I still think getting to $100 million in a short time frame, right, most chains would kill for that. It's really started to go parabolic over the past 10 days, and particularly over the past 7 days, as the TVL has climbed from 200 some million to nearly $500 million, and volume on decentralized exchanges has jumped with nearly $85 million in volume over just the past 24 hours. And Linea, like many of the other chains that are growing quickly, combines the fact that it's in the Ethereum ecosystem, so is benefiting from ETH's bullish price action, with an ongoing incentives program. Linea has this long-running campaign of LXP where they offer points or experience points in exchange for using various applications within their ecosystem. And as a reminder for people who are participating in this, you need to confirm your POH status via this website by May 26th to qualify for this latest LXP drop. Also shout out to the Clip team, a yield optimizer on Linea that I'm an advisor for. But the point being that the winning strategy, at least for this week, seems to be Ethereum layer 2s that have some sort of ongoing points program. And then what remains to be seen is, will, like Mode, Blast, and Linea be able to keep growing and maintain their traction and TVL after their initial airdrop? I think that Linea particularly has a lot of potential upside given the fact that they're built by consensus, which could attract reputable players to deploy on their chain. In other news this week, we have Uniswap Labs announcing a new ERC standard, ERC 7683, and the idea behind this is to be a standard for cross-chain intents that will solve fragmentation through a universal filler network. And Uniswap Labs is going to adopt this themselves when they go cross-chain with Uniswap X. And if successful, that could lead to other applications adopting this standard as well. In other news, Vitalik tweeted out earlier this week that in his opinion, in 10 years, all rollups will be ZK and will commit blocks with finalized state roots to L1 every slot. And then he highlights that it will take a lot of infrastructure to get there, but that's the clear end game. And while 10 years is far out, right, it's basically a lifetime in crypto. I think that the implication of this is that Vitalik is reiterating that ZK is the end game. And so I'm going to keep that in mind moving forward when looking at Ethereum rollups that are using ZKs versus optimistic rollups. In another piece of news, the governance proposal for Say V2 is live. If this passes, the mainnet upgrade will be on Monday, May 27th. And as the time making this video, 100% of votes, more or less, rounding up, are in favor of the proposal. So this is almost certainly going to go through next week. And as you recall, this makes Say EVM compatible, among other things. And I think this could, assuming the tech rolls out successfully, result in increased adoption and deployment of the Say network. Say, I interviewed the founder on this channel a few months ago, has the distinction of being a parallelized EVM, or it will have a parallelized EVM once Say V2 rolls out successfully, and that should allow it to run EVM applications. So that's applications on Ethereum, Arbitrum, Base, etc., but be more scalable and faster. So if all that tech works as it's promised, then I could see in this becoming a major competitor in the space of monolithic L1. Say has a huge community, so there is of course a lot of anticipation over this. That being said, this isn't trading advice. Short-term volatility can go either direction with these sorts of proposals and rollouts. In another piece of news, DeFi Llama team rolled out this new tool to compare FTVs. I think this is pretty interesting just to sort of think about what it might mean for token prices if one token were to have the FTV of another. So for example, say we took Solana and Ethereum, we could say what would the price of Solana have to do for the FTV to equal Ethereum? And this is different than most of the tools you see. Most of the tools you see are just market cap. Another example, we might say, okay, Solana is currently one of the leading layer ones. What if Near FTV caught up to Solana? What would happen to the price of Near? These are not predictions, by the way, guys. We're just doing exercises now. We're just asking questions, and this would be 10x. So I think this is a pretty interesting tool. Link it in the description. Stargate V2 is here, or rather, it will be here in 4 days on the 28th. So Stargate is the layer 0 protocol for bridging tokens, or rather a layer 0 protocol for bridging tokens, sort of the proof of concept that launched a couple of years ago. Check it out. Keep an eye for what happens with V2. Another piece of news, I think this is huge for Arbitrum. Robinhood Wallet has enabled access to gasless swaps on Arbitrum. So that is another sign that Arbitrum, despite, I don't think Arbitrum's gotten as much attention as other layer 2s recently. I mean, even I earlier was focused on these other layer 2s that are growing faster. But Arbitrum is still the largest layer 2 by most adoption metrics. And they're developing some pretty powerful integrations with exchanges and now with Robinhood Wallet as well. So I think that's great news. In other news, the Phantom Foundation announced some major updates about their upcoming Sonic chain. The Phantom FTM token is migrating to the S token. This is going to be a new layer 1 chain with a native layer 2 bridge connected to Ethereum. There will be a new business entity responsible for networks governance and treasury management functions. And Sonic Labs will be a new business entity responsible for driving growth among dApps, partnerships, and users. And then one thing to note is that their Opera chain is being upgraded with Sonic Tech. They will no longer use the name Sonic to refer to their tech stack. It will now refer exclusively to the new chain. And if you're wondering again what happens with your FTM token, there will be a migration 1-to-1 from Phantom to S. And then they raised a $10 million fund with some major names: Aave Foundation, Stani Kulachov, founder of Aave, Michael Egorov, Sam Kazemian, founder of Frax, and other big names. So they've got some serious power players in the world of DeFi getting behind this new chain. I think this is going to be really intriguing. There's some massively smart and experienced people working on the Phantom tech, and so excited to see what happens with this. And I think as far as the rebranding, honestly, I kind of think it makes sense because a lot of things happened with Phantom years ago. There was a massive TVL pump and then crash because of what happened with some key applications, and then there was the multi-chain. I guess an exploit. It was really like more of a regulatory thing, and so with that being said, I think that really hurt the Phantom brand, and I think it makes some sense to rebrand to Sonic. Also, just a cool name. And some sad news: Kabosu, the dog behind the Doge meme, passed away, unfortunately, at the ripe age of 19. Love dogs, RIP. Next up, we have MetaMask is adding Bitcoin support to the MetaMask wallet, which is normally used for Ethereum and Ethereum compatible chains. So guessing, just my assumption on this is this probably has to do with the increased use of Bitcoin for more things than just storing. People are using Bitcoin for trading ordinals, for trading runes, BRC20s. And my guess is that increased activity has caused MetaMask to want to add Bitcoin support. So great for the Bitcoin ecosystem, and ultimately I think good for MetaMask as well. Another piece of news: Morpho, a DeFi application with pretty good adoption, in fact, on Ethereum, is coming to Base. So more big applications are coming to Base. Next up, let's talk about this week's airdrop news. And as a reminder, if you like to trade and you like to use DeFi, then check out this video sponsor, RabbitX, at the link in the description. All right, so first piece of news is Tyco, a based contestable rollup Ethereum equivalent in ZK EVM, announced their airdrop. The token airdrop is here. You can check your airdrop eligibility now, and this airdrop is 5% of the initial TKO token supply, and this includes a variety of different types of users, including proposers, provers, bridgers, people who have Galaxy points, developers, Loopring community members, and more. So check that out if you've used Tyco, or maybe if you've just interacted in the Ethereum ecosystem, because they have GitHub contributors listed on there. Next up, exclusive from the block, is that ZK Sync may be planning an airdrop in the middle of June. Now, I haven't seen any official announcements about this. It just says sources, and it's from an internal message screenshot, so I would take this with a grain of salt. However, we should know pretty quickly if they do the token generation event this week and people are able to find it on chain. And allegedly, the airdrop is currently targeted for June 13th, which would be before the last expected airdrop on June 26th, and the ticker will be ZK. So keep an eye out for that. I'm guessing the snapshot has already been taken, but if it hasn't, it wouldn't hurt to make some last minute transactions on ZK Sync to hopefully qualify for something. Next up, dBridge. We've been talking about dBridge for a while on this channel. One of the main bridges, especially to go between Solana and EVM chains. Well, they announced their TBR token a few days ago. And one of the 3 key stakeholders is the community. So you can see here, it will be an SPL token on Solana, and 20% is dedicated to the community, and launch 2 billion DBR. TBA percent will actually be distributed to users and projects based on the future snapshot of season 1. So as far as I'm understanding, this snapshot hasn't been taken yet. We don't have an exact date on when this is going to launch yet, but we know it's coming. So if you haven't used dBridge yet, I strongly encourage you to use it if you're bridging between 2 of the chains, because you know that there's an airdrop coming. Next up, Swell Network. Swell is Ethereum liquid staking, restaking, and layer 2. So it's a whole suite of Ethereum projects, and they were expecting the token generation event to happen already, but there was a delay. So as an apology, they are increasing the token allocation for season 1 from 7% to 8%. Honestly, not a bad trade. Final news, my friend Crypto Cove, the legendary airdrop YouTuber, launched this tool, Rumor. So plug here for Crypto Cove, makes great content. So if you like airdrops, I encourage you to check out the tool. I only know what's public from it. I don't have any special access or anything, but it looks pretty solid to me. For more frequent updates on DeFi news and strategies, be sure to subscribe to my newsletter at dynamodefi.substack.com, where I send out the latest trends, farms, and on-chain analysis every single week. And for more videos like this one, be sure to like and subscribe. Until next time, this is Dynamo DeFi.